Oh, God. Good morning. It's PK here. Look, I've been around in the trading. I started 1982, 35 years. You know what? We have to lose the sunglasses. Look, I got dressed up. First of all, it's Saturday morning. I can't see the thing. It's Saturday morning. Let's see, 10 to 6. Who gets dressed up with a jacket and a shirt? I did this because I want you guys to take me seriously. I can't look like the crazy normal me. So listen, what we're going to talk about here today on Out of the Box, remember, not think out of the box, out of the box lifestyle, which is what are the worst problems trading anything? I know a lot of you are going to relate to all these things. I've got six, is that you say six? 6 things I want to talk about. And how we can fix these things. What is the solution? You know, forget about all the books in the bookshelf. What bookshelf? There's no books back there. What are these going to do for you? They're not going to tell you. I'm going to make it clear and simple from someone who's really been around the block. So ready? Let's start. What are the worst problems in trading anything? Stocks, futures, options. We'll talk stocks and futures, commodities. Call it what you want. Bitcoin. Number 1, watching it. You guys know what I mean. You're in the position. You're in your stock. You're in your gold. You're in your soybeans. I don't care. Your crude oil. Your NASDAQ futures, it starts dropping. What happens? It's like this. A deer in the headlights. This is, we know, you don't want to put a stop in. We know why. How many times you put that stop in and they come after us, especially when you're a shorter term trader. You know, I started out as a longer term, but now everything, because the last 15, 20 years, everything has gone down shorter term. Me, PK, I'm 1 to 4 days now. I used to hold things for 2 months, 3 months, 4 months. Back in the day, commissions were high. In fact, I think the trading was easier back then because you were forced to hold it. So number 1, watching it without a stop. So what is the solution? Okay, you don't want to put that close stop in. I get it. I've been there. Stopped out, takes off without you. What I recommend, what I do, I put in an emergency stop. That's far away from the market, you know. So just in case some disaster, if you trade long enough, all of you eventually are going to face that disaster. Who knows what it will be? Out of the, you know, some news event, something will happen, and you're going to be stuck the wrong direction. This is the solution. Put an emergency stop in. It's so simple on the computer. It takes 2 seconds now. It's not like in the past you had to pick up the phone. So that's that, watching it. Don't be a deer in the headlights. Number 2, adding to losers. You know, one of the great all-time traders, some of you who've been around is Paul Tudor Jones, somebody who was a generation older than me. When I started, we idolized this guy. He was the first guy who was able to trade $100 million successfully. You know, that was quite big in the 80s, and we know he's a legend. And one of the great things Paul Tudor Jones said was, only losers add to losers. That's simple enough. So, what's the solution? Oh yeah, one other thing I want to mention about adding to losers. Have I done it? We've all done it. Of course we've done it. You know, we just can't admit we're wrong. It's our ego takes over, and you know you have to have it's a fine balance between ego and being humble. You have to have the ego to do it, but then that ego can destroy you. So what is the solution? It's very simple. Don't do it. Don't add to losers. You might say, we've done it, we know, once you get away with it sometimes, but in the long run, you're going to get screwed. You're going to be doubled up, tripled up, and you're going to bury yourself. You're going to wipe out all those great trades you've made, all that work, all in one trade. This is one of the classic mistakes. We know a lot of the stock traders, both in the futures too. What do they say? They say, but averaging, what do you call it? Averaging down, dollar cost averaging. If I liked it up here, is it better down here? We all know the arguments. I'm telling you, don't do it. You get stuck. It's not worth it. Those times it does turn around, and you make something. It's just not worth it. Number 3, betting too big. Now, this is something I've done a video before. I have an issue with. There's so many trading books and trading schools. They talk about, that big question in all the forums. How much should you risk per trade? What percentage of your capital? And usually the number you see thrown out, typically 1.5% to 2%. And I'm telling you, this is wrong. You do this, you're gonna go broke. That risk of ruin, you're gonna be broke eventually. So, and they all say to do this. This is what blows my mind from some top writers of these books. But maybe that's why they're writing books. In fact, I bet if you go to their house, they got an office with a bookshelf with a ton of books. Anyway, the point is that, what is the solution? I believe you should trade 0.5% of what your account size is. And then, listen, if you start winning, then you can add to winners, not add to losers. Everyone I know who really makes a bunch of money, and the times I really made money in the last 15 years, since the short-term trading has come into play, is when I add to the winners. And how much do I add? Then I'll go to 4 to 1. If my bet's 0.5%, I'm doing one contract, then I'll do 4. You get the idea. So this is a very big mistake most traders make. Of course, you can get lucky when you start, but believe me, you trade long enough, betting big will catch you. No doubt. And I see this all the time in Las Vegas, sitting at the blackjack table. You'll see this. In fact, even me, I can count down the deck and cards. Can I make money in blackjack? Of course not. It's too tough. They'll throw you out of the casino. But I can outlast anybody I'm sitting with. I'll be the last to lose my money because I know how to bet. I get this from the trading. So that's number 3. Number 4, it's a myth in reality. Of course, we've all done this. Maybe you still do it. I'm telling you, in the long run, when you get these big moves up or down, these big trends that we all love, right, to trade. What do all the books, trading books say? We know, cut your losses short, let your profits ride. We know this saying. And what do they tell you to do, how to do it? What's the solution? Their solution in the books? Very simple. Just trail the stop. As the market moves away, you move that stop up. It sounds okay. It sounds reasonable to me. Tried it. But how many times you trailed that stop up, right? Market comes down, stops you out, takes off without you. Believe me, it's just too good to be true, this trailing stop. It just doesn't work in the long run. The market just day in and day out, there's too many, can be too volatile. And you can be on the right side, you did everything right, got in right, perfect. And next thing you know, you're trying to protect your profit. The bottom line is this. If so I say, what's the solution? Is don't do it. I move my stop once. I get in and move it to even once I'm up so many points, handles, whatever I'm trading. And even that is an art. Sometimes they say if you risk 1, if you're up 1, move it automatically. Trading is no automatic. Once you want to start having automatic rules, you're going to get thrown, you're going to have problems. It's easier emotionally. You say, I'm working on my discipline. But, that's why the trading is so hard. You have to have discipline, but you have to have some flexibility. And this takes only one thing. It's called experience. Experience will teach you these things. So, again, if you get this, if you're up this big money in your trade, in your stock, in your future, you get nervous, dump it. You can always get back in. It's much better than trying to move that trailing stop if they show the perfect example. Unless that thing moves perfectly every day. How many times does it move perfect? Rarely. Once in a great while. In fact, and those are always the pictures they show in the books, how to move that trailing stop. So I say don't do it. Just get out if you're up some large amount of money. You can always get back in. The one thing that's funny I was going to mention about this is kind of like for you poker players. I mean, I'm not a good poker player. I learned how to play old. I wish I'd learned young, but I learned online just to play for practice. In fact, I did a whole video playing poker. I think the Texas Hold'em is very similar to trading. In fact, if I was to hire 10 strangers, I'd hire all poker players. That'd be the first question. Oh, what games do you play? Oh, I play backgammon, I play this, I play that. If they say they play poker, that's who I'd be hiring, 10 poker players. And the reason is because the decision-making process is very similar. So I did a video that I won't go any further. So again, don't move that stop. Don't trail the stop. It's wrong. It will cost you in the long run. You won't be able to make this big move. You're just going to have, they say you got to have a strategy, but, again, trading is an art. It's not a science. I used to joke around and say, this is, I try to make it a science project. With orders, put your order in. These things are wrong. So have some flexibility. All right, you see, PK goes off like crazy. I could go on forever here. I probably lost already. I'm only talking 6 things. It's already been 13 minutes. I made it to number 4. 2 more. Hang in here with me. Number 5, another huge mistake, taking a position before a major report. Gambling. You're much better off buying a scratch-off ticket at the lottery. Because it's fixed. It's like buying an option. At least you're going to risk $10, $20, $30, or and you might win $1 million. But taking a position before a major report, this really is gambling. Now, if you want to gamble, go ahead and do it. But this is again, don't do it. And what do the stock people do? They take positions right before the earnings, the day before. They make forecasts. The problem. They can't protect the downside. This is the problem. And you can say, well, PK, isn't there a strategy? Is there a strategy to take advantage of those earnings reports? Yes, there is. If you want to take some chance with limited risk, buy a call option or buy a put with a week to go. Things like this. So at least if you're wrong, you're able to load them up and take and you know what the risk is. You know what the downside. But to take an outright stock, before that earnings report, this is big time gambling. This is, in my eyes, a craziness. I'm so nervous right now. I get talking about the trading. Look, I'm trying to give you these tips from all this experience because, again, I wish someone had gave me these tips when I was your age, in my 20s and 30s. No one told me nothing. It's part of the problem, and this is what I'm doing this whole thing for. So just give me a second. Try to let it sit. Go ahead and don't get pissed off. I'm old. I go to the fitness 6 days a week. We know smoking. I lived in Europe 12 years. I know many of you have been Italy. I have a European wife. You know what happens. Oh, wait a minute. I can't smoke. I'm inside. My wife will kill me. Forget about that. And of course, so don't do that. Don't take a position before a report. And number 6, the worst problems you can do trading anything is, this is true, not letting your winners ride. You know, that old saying, cut your losses, let your winners ride. Sounds easy, but we all know it's not so easy. Especially if you start making it quickly, which sometimes happens. You get some lucky break, the market takes off or crashes right after you get in. And now at the computer, although it's got our screens up, I went from 6 screens, I'm down to 3 screens because I get old, I can't see me. Look, I'm old and gray. Sometimes, and you see the little boxes, the red box if you're losing, green, and all of a sudden that green box is exploding up. And believe me, the temptation to grab it, I've done it. I stop. I'm telling you from experience, try it. Just listen to me, right? In fact, it's probably better you don't watch those. You remove that from your platform, how much you're up or down. And you can say, but PK, I'm in 5 things, 6 things, I want to know where overall stand. Well, maybe if you're a long-term swing trader and you've got 5 positions, you know you're going to hold it for weeks. When you're a stock, you're this type of trader, more swing trading style. But if you're in the shorter term, like I am, less than a week, stock, future, what's the solution? Get rid of the little red and green boxes, especially the red box. Shouldn't affect you because you should be able to blow yourself out. But that green box, when that thing starts turning green, I don't have to tell you how you start feeling. Your blood boils. This is why we're all traders. And the thing is, one last comment I must make to get under 20 minutes here. As you see, I just can't shut up. What can I tell you? This is part of my character. But believe me, so fast forward through this, write these 6 things down, and forget about the rest of the commentary. But listen, the books, all of them, I did this for years and made some money, But it wasn't until I switched, which is, what do they all say? How much should you go for? You probably know the number, 3 to 1, your average trade, you look at your statistics, your average winner, average loser, all these metrics. I say, forget about it. Forget this. First of all, this 3 to 1, yes, mathematically it works. You will make something. If you risk $1 to make 3, the math behind it works. The problem is that in the reality of trading, we're not machines. We're going to make mistakes. We get bad fills, get screwed on the stop. I don't have to tell you all the things that can go wrong. We're just not perfect. And we're going to have losers half the time, 40% of the 60% of the time, whatever type of trader you're trying to do. But we're going to be wrong a lot. So the problem is, the reality is, going for 3 to 1 is not enough. In fact, it wasn't until I changed. And to show you, even me, PK, been around a long time, it took me many years to change. I just changed 5 years ago. I'm going for 10 to 1, 20 to 1. You can say, how often does it happen? Not too often. I have a lot of break-evens. But when I'm right, believe me, I'm really rewarded. And all of a sudden, this changed everything for me. This is when I really started pulling up big. Because I know the technique and how to bet big on certain things with a close stop, right? I'm not afraid of that, right? But when I'm right, those few times, those 10, 12, 15% of the time, I catch it. And I've loaded them up something big, and the difference is, you've loaded them up big too, on your stock, on your future, doing a bunch of positions. You have great feeling, but then you get out of 3 to 1, or you scale out, all these things we read. You know why? Because it feels good. I get it. Been there. I'm telling you, that's why I find as I've gotten older, I try to put this position on and then walk away from the screen. Don't spend so much time staring at it. Where I used to, even though I know I'm gonna, because the temptation, the emotions take over you so strongly. You guys all know this. And so I'm trying to tell you that what is the solution? The solution is, number one, it's two things. One, try to go for more. 10 to 1, 8 to 1, 20 to 1. Look for those type trades. Okay, you make less trades. So what? This is a game about results, about making money. And everyone, again, see, I just keep talking. Everyone has this, what gets all you young people in, it's no different, actually, forget that. Let me rephrase that. But I have people that come to me, PK, I want to be a consistent trader. I want to make $100 a day, $500 a day, $1,000 a day. And I'm telling you, this thinking is wrong. I had this thinking too. And the problem is the trading really doesn't work that way. The market won't allow you to make this. Nobody is that good, at least nobody actually for any length of time. You might be that good for 3 months, 6 months, even a year. But, I don't really want to go off of day trading so much. I'm not I have trades that are day trades, turn out to be a day trade, but I'm trying to keep it as long as I can. And many times I'll get out after 4 hours, but I'm certainly getting out in 20 minutes, 30 minutes. I don't care what happens. So anyway, these are the tips. I went way too long as usual. This is I wish everyone to take a listen. This PK with out of the box, and remember, always think out of the box, because you know what? The life is now. Right now. Ciao, everybody.